Everyone's not sure whether good news is good news again or whether it's bad news. And a tech giant gives us the latest window into AI demand. My name is Daniel Schwarzman. This is the long and the short of the markets, December 10th, 2023. You can subscribe to this channel on YouTube. You can check out shortinvestingguide.com or middlecoastinvesting.com to read more of my work. I'm going to start out with the last week's market, which saw a slight increase in all of the indices. S&P 500 closed over 4,600. It is just shy of 20% up for the year after being down 19.4% last year. It's over 20% if you add in dividends you would get from owning an S&P 500 index. Last week was an interesting week, I think, because of the jobs report that came out on Friday, which was a decent jobs report. We saw 199,000 new jobs in the U.S. in November. There were a lot of different things going on there with people coming back from strikes and so on, and some of the revisions weren't so bullish, but it was one of these reports that a lot of people are waiting for in the economics world, i.e. a report that was not so hot that would require the Fed to continue to hike, nor a sign that we're really in a recession. We're continuing to grow. The GDP number for Q3 was quite strong at 5.2%. Can't remember exactly when that came out, but solid number. And now we have this jobs report. How did the market react to it? At first, negatively, the market opened down a little bit, but eventually closed higher for the day. I mentioned the good news, bad news thing. When the market is focused on what the Federal Reserve is going to do with interest rates and is pricing in several rate hikes for next year, its hope to some degree is that bad economic data will turn up to force the Fed's hand. If the economic data is bad, suggesting less growth and hopefully less inflation, that would mean the Fed would be able to cut rates to support growth while not being so worried about inflation. This report wasn't quite there for that. At the same time, there's a lot of reporting about the Fed. There was a report just today from Nick Timmerhouse in the Wall Street Journal, who's considered the leading insider reporter on the Fed, that the Fed is starting to contemplate when rate cuts should happen. The market is expecting, like I said, multiple rate cuts next year. Whether or not we get there, Jerome Powell, the chair of the Federal Reserve, has said it's too early to talk about that. Whether or not we get there, market probably focused on that too much, but the economy as a whole seems to be plugging along. Doesn't seem to be a detractor on the results of individual businesses. The S&P 500, as I sit here, is trading at 20.4 times last 12 months earnings, according to the Wall Street Journal. That's 6.25% higher than it was a year ago at 19.2. So there has been some multiple expansion over the last year. At the same time, that also suggests that there was some earnings growth over the last year for the market to have risen nearly 20%. As we wrap up the year, we always like to look at what the key themes are for the year and start to look ahead for next year, even if, as I said last week, it's a little bit artificial to really think of a clean break. Either way, the big story of this year has been the rise in prominence of generative AI and its effect on the economy as a whole. It was about a year ago that ChatGPT 3.0 rolled out, which turned tons of people's heads to the possibility of generative AI now and today. And it took a few months for that to actually have an impact on the market, beyond all the press releases that different companies tried to issue to get their name attached to AI in the beginning of the year. Microsoft benefited from their partnership with OpenAI, the company behind ChatGPT, but there wasn't really a direct stock market impact until May, when NVIDIA, a leading semiconductor company, released its earnings that showed there was huge demand for its graphics processing units, GPUs, which are the semiconductors that are the engine behind AI computing systems and AI computing engines. NVIDIA had a huge report. It took off. It got itself into the so-called Magnificent Seven for the year. And we saw more and more of an impact in AI throughout the market. I want to talk about a different semiconductor company today, which is Broadcom. Broadcom is also a semiconductor giant and a tech giant, but it's not NVIDIA. It's more diversified and not as exposed to AI. That makes this report a little bit more interesting in my view, because it's a little bit of a different angle instead of a so-called pure play. They did talk quite a bit about AI in their recent report. They reported earnings for their Q4, which ended in October, just last week. December 7th, Thursday. I want to talk about their report, what we can learn from that as far as AI, and also they had another big deal go down that is worth talking about as far as what it says about the economy and about running a business. First of all, what's Broadcom? Broadcom is a semiconductor company. Actually, they're more like a semiconductor designer as a primary business. They design semiconductors that are then made by Taiwan Semiconductor and other foundries, and then sold on to companies across the spectrum, from ranging from phone makers like Apple and Samsung to telecom companies that are trying to deploy broadband and to manage broadband systems, to companies indeed building AI chips. Broadcom's main business is in the semiconductor industry, which has had a huge year as an industry, and is an interesting industry because it tends to be historically very cyclical. It's exposed to demand for end products. It's because Broadcom is not selling to you and me as individuals, it's selling to companies that we might use. They're exposed to the demand for those products. The iPhone cycle was the best easy example of this in the last decade or so. When a new iPhone came out, there would be the tear down to see which chips were in the iPhone, and companies would see their prospects rise or fall depending on how much they got into the iPhone chip wise and how much demand there was for the iPhone. Broadcom's solution to this cyclical problem was to steamroller it by acquiring other businesses. Broadcom itself is the agglomeration of several businesses that have been purchased over the year. LSI, Avago, which actually was where the ticker symbol for Broadcom comes from and was kind of the acquirer, if I recall correctly, to build up its muscle and to diversify its exposure. Broadcom also pursued diversification in another way by building a software unit. Software, in theory, being attractive because it's more secular. The demand for software continues to grow year over year because you can't cyclically go in based on a product. You need that software to continue to run your business. Broadcom bought CA, Symantec, and Brocade, all of them really Web 1.0 sorts of companies before SaaS, which is software as a service, before the modern software company that is subscription-based and so on. These companies were older, slower growing. Broadcom has built a unit out of them. And most recently, Broadcom bought VMware, which is bigger than these companies and sort of a Web 1.5 company as compared to SaaS, has been moving in a subscription model. VMware is the reason that I own Broadcom shares. Broadcom is one of my newest positions, and it's because I own VMware and Broadcom acquired them in a deal that I'll talk about in a second. One more thing before I get started is that Broadcom does develop chips for AI computing. They've been reported to be a major chip in Google's tensor processing units. Those are units that Google designs itself so that it doesn't have to buy NVIDIA's very expensive graphics processing units for its AI computing. Instead, it pays Broadcom a lot of money for their components that go into those chips. There was reporting in The Information, a website, that said that Google was looking for ways to bump Broadcom out or to replace Broadcom in those chips. That reporting has been denied so far, but it wouldn't be a surprise that Google is trying to pressure Broadcom or trying to find other ways to be more cost efficient with their development of their AI, even if they need to develop it. All the same, Broadcom sells chips to hyperscalers, the Googles, the Amazons, the Microsofts of the world, for AI chips, and also sells a lot of networking chips, which are relevant for AI, because as AI computing goes so much in need and power and needs to be connected super well, the networking chips become important and the networking systems become important, which increases demand for Broadcom. So they do have exposure to AI. Sorry, one last thing before I get going into their quarter. I mentioned the VMware deal. That deal took forever to close. Talking about announcement May 2022, closed only a few weeks ago, November 22nd, 2023. And it wasn't a deal that was antitrust, really. There were some agreements that Broadcom reached in various countries where they agreed not to bundle sales or not to do other things to affect competition, but these were pretty separate businesses. There wasn't an obvious overlap. Instead, Broadcom got caught up in China-U.S. relations. China was the last company to approve the deal, and it was widely reported that China was holding up the deal because of general angst over relations with the U.S. The U.S. has barred NVIDIA from selling to certain types of chips to China to power their AI systems, for example, and Broadcom got kind of caught up in the mix of that. The deal did eventually close. The agreements that Broadcom reached with China were pretty run of the mill from what I could tell, so I don't think they were reason in and of themselves to hold things up. All of which to say Broadcom is an interesting spot because they're exposed to AI. They're right in the middle of China and the US in that sense. And then they're in a hot sector, semiconducting, and have just completed a major acquisition in software. So it puts them in between a lot of different things in tech right now. Broadcom reported earnings on Thursday, as I mentioned. They beat estimates for earnings and revenue, which isn't a big surprise. They issued revenue guidance for the year, which came in, from what I could see, a little bit lower than analyst estimates, which were basically combining estimates for VMware with estimates for Broadcom, since the deal only closed a couple weeks ago. The difference is probably down to Broadcom planning to sell off a couple of VMware's units and not including $1.6 billion of revenue in their guidance. So it's not such a big deal. I don't think people reacted too negatively to that, but just a note there. Broadcom talked about semiconductor growth. Again, their two businesses, their semiconductor unit grew only 9% last year, which on the surface doesn't sound like a lot of growth. Not where is this bonanza of AI? More excitement comes, though, when you read and listen to Broadcom, and specifically to their CEO, Hock Tan, who is one of the more charismatic tech CEOs out there. Tan said that AI reached almost $1.5 billion in sales in Q4 for Broadcom, which again ended in October of 2023. Doing some extrapolation from previous quarters where it was over $1 billion in Q3, under $1 billion in Q2, not really broken out in Q1, it seems likely to me, and I'll show my math again, not to be taken literally, but just loose estimates, that Broadcom's AI chip sales probably doubled from Q1 to Q4, and probably end of the year, let's say loosely, over $4 billion in sales, which for a company that is expecting to have $50 billion of sales next year, again, doesn't sound like a huge needle mover. We can, again, through these extrapolations, sort of get a guess at how much Broadcom is expecting to sell in AI next year. They said that they're expecting $30 billion in sales from semiconductors, roughly 6 to 7% growth, if I have the number right in my head. We can expect most of that growth to be AI. If we were to just attribute all of that growth to AI and nothing else and assume that my 4.1 number is right, we're seeing Broadcom at $5.9 billion in sales in AI computing chips next year, or generative AI related chips and semiconductors. That number is probably too low, even though that's 44% growth, because that would essentially mean that Broadcom is flat from Q4 through all of next year. I don't know their seasonality, how much things change from quarter to quarter, but that seems unlikely to me. If I go another way about it, I think they do say that they're expecting 25% of their semiconductor revenue to be AI compute related. That basically gets us to $7.5 billion. $7.5 billion is closer to 85% growth compared to my loose estimate for this year of $4.1 billion. Broadcom is unlikely to literally break this out in their 10K, which will come out later this week, but these are the sorts of things that are worth looking out. 10K might take longer to come out now that I think about it. Anyway, a lot of growth in AI. It also puts an interesting tension because it either puts Broadcom in a place where, even though they've argued that they're hitting a soft landing, which usually is referred to the Fed, but in their case means we think that we're at the trough for how much our semiconductor demand is from our telecom providers that we supply to, or from other industries outside of AI computing. Even though we think we're at a soft landing, if 30 billion is right, then either AI is not going to reach that 25%, or the other units are going to decline in sales this year. Or the third option, which I think is worth flagging and keeping in mind, is that Broadcom beats their estimates for the year. Let's talk a little bit about what Broadcom actually said on the call. I'm going to throw up a couple quotes. I'll read one now and then talk quickly about another. On one, they referred to an earnings report that came earlier in the week from AMD and said, I fully concur with AMD when they indicate that it looks like demand appears to be accelerating rather than staying stable or decelerating. And then later, Tan says, that a diversifying market means there's lots of unique large language models, LLMs, which are powering generative AI, which means essentially that I read it as Broadcom does not expect to be just locked into one or two providers. They're not just going to be providing to Google. They're not just going to be working with Amazon or whoever else they might work with. They're going to be able to design their chips to adapt for different companies, which should lead to more growth for them. The stepping back, I mentioned earlier, semiconductors don't work directly with end users like you and me. All of this is going to ultimately depend on how much are these companies actually able to monetize their AI compute spending. They're spending a ton of money because they think there's a pot of gold at the end of this rainbow. And we're going to have to start seeing that more and more over the months and years ahead. I suspect there is a lot out there. We saw Elastic, an enterprise search company, a company that develops search products, search software for companies to go through their database. They had a huge report as their AI product got a lot of buzz. That's an example of there are real applications of this. And as we see more and more of those, we should be watching out for them in our lives and other sectors to see how they're playing out and see whether companies are actually driving business results. In other words, whether they're making money or saving money. That's going to be the necessity for AI to continue to be such a hot trend in the market. We'll see if that happens. Broadcom right now sounds pretty confident that they're going to see a lot of benefit from it in the year ahead. For all the excitement about AI, Broadcom actually spent more of the time on their call talking about VMware, their newest acquisition, and their biggest, if I'm not mistaken. It's not that surprising. This is the first time that Broadcom's been able to speak about VMware, been able to give guidance about VMware, been able to talk about their plans in more detail since the acquisition. On the call, they talked about a couple things. They talked about growth, they talked about cutting, and they talked about uncertainty. Growth. They talked about accelerating VMware's growth towards the end of the year. Tan, I believe, was the one who said that by the end of the year, we expect to see growth accelerating as compared to where it is now at VMware. That's by next October. On the one hand, this sounds really impressive. It's hard to accelerate growth. This is a big, successful company. On the other hand, it sounds a little less impressive when you remember that VMware has been in a holding pattern for 18 months. It's hard to win big sales or to really make new changes when you're stuck waiting for a deal to go through, especially in recent months. Everything you read on the net about what VMware employees have been saying over the last few months, they haven't sounded very excited about the limbo nature of the deal. Accelerating from the deal level then shouldn't be so hard. But then the other component of this is the cuts. Broadcom announced that they would be taking $1.3 billion in charges this year for the severance and other sorts of restructuring charges that they're going to do over the course of the year. I think they said most of those will be in this year, some maybe in 2025. On the call, management said that it expects the operating run rate for VMware to be $1.3 to $1.4 billion a quarter. That is 35 to 40% less than what VMware was before the deal closed. That's a significant cut. If Broadcom is able to cut that much out of VMware while accelerating growth, that would be something that investors get very excited about. Investors, we're not always the best about this. We forget the human cost, whatever else. Get excited when you see cost cutting and growth. That's a hard to find combination. I should say that the way they explained the growth seemed to me a little bit trite. It basically was arguing that subscriptions leads to growth and that the more subscriptions you get, it just kind of naturally grows. But we'll see. They know a lot more about sales and business success than I do, so I want to be humble in that point. The last thing that was interesting about VMware was that Broadcom usually issues its guidance quarter to quarter, and instead they said, we're not ready to say anything about Q1 because we think this could be really messy with the deal, with everything else, transition, so on. We can give you our estimate for the year, and then we'll check back in next quarter and see where we are quarter to quarter. Uncertainty is something that the market hates. Generally, that's a negative sign. Broadcom's shares went up and down over the day. They ended up higher at the end of the day on Friday, so it's hard to say what the market liked, didn't like. There was I think the uncertainty was received as a negative. On the flip side, Broadcom has set itself in the following position. It has raised its dividend meaningfully, which is always a sign of confidence. It said we're going to start buying shares back again, which Broadcom had paused while it was closing the VMware deal. It issued guidance which was at least not terrible. And now it's given itself room to figure out what's going on in VMware, take some time to get things on a roll in terms of organizing it the way it wants, sell off a couple units that it plans to sell off, and so on. And then at the end of the day, if the little math I did on the semiconductors is right or whatever else, there's probably room for Broadcom to outperform, accelerating growth, exposure to AI. Those are all things that the market loves. And even though Broadcom is a fully priced company, and also I suspect its GAAP earnings next year per share are likely to be lower than they are this year, just from VMware being lower margin, all the shares that Broadcom issued in the deal, the debt it's going to be paying, and so on. Suspect if Broadcom is able to accelerate growth of VMware, show continued exposure to AI, show that things are not falling off a cliff everywhere else, investors are going to be happy, even with the full multiples that it's paying on the shares right now. But we'll see. Nothing there. Investing advice. I think that's why Broadcom is an interesting company to look at and put it on the microscope, and also is a useful exercise for me as it's one of my newest companies. That wraps it for the long and short of the market today. My name is Daniel Schwartzman. Check out shortinvestingguide.com for educational materials that I've put out on how to invest in the market. I have this Short Investing Guide channel on YouTube you can subscribe to. Check out middlecoastinvesting.com if you want to learn more about my investing. I am a registered investment advisor, available on that website. Leave a comment if you've gotten this far and you have any questions or thoughts about Broadcom. Thank you for watching, and I hope to see you next week or whenever I next do this.